On April 30th, 2019, General Motors reported first quarter earnings results for the period ending March 31st, 2019. This video provides an update on the company's dividend safety using its most recent operating results. Before we begin, I invite you to subscribe to this channel and like this video, which will help more people discover Sure Dividend's investor education efforts. With that out of the way, let's dig into General Motors' dividend safety. To begin, let's talk about General Motors' business model. General Motors is the largest automobile manufacturer in the United States. The company has operations in more than 30 countries and sells its products in more than 120 countries around the globe. General Motors has a market capitalization of $51 billion, with annual sales of $147 billion. General Motors is a well-known company, but it is not a well-known dividend growth stock despite its 4.3% dividend yield. This is because the company has only paid a dividend since 2014 and hasn't raised its dividend since 2016. Looking ahead, investors interested in owning General Motors stock will likely be interested in the safety of the company's dividend payment. For the remainder of this video, we will discuss General Motors' dividend safety from four perspectives: its dividend safety in the context of its current earnings, its dividend safety in the context of its current free cash flow, its dividend safety in the context of its recession performance, and its dividend safety in the context of its current debt load. First, let's discuss General Motors' dividend safety in the context of the company's current earnings. In the first quarter of fiscal 2019, General Motors generated adjusted earnings per share of $1.41, which compared unfavorably to the $1.43 of adjusted earnings per share in the same period a year ago. For context, General Motors currently pays a quarterly dividend of 38 cents per share, which implies a payout ratio of 27% in the most recent quarter. Looking out over a longer time horizon, our conclusion is the same. General Motors generated $6.54 of adjusted earnings per share in fiscal 2018. The company distributed $1.52 of common share dividends during the same time period for a dividend payout ratio of 23% in the full fiscal year. Using earnings, General Motors' dividend appears very safe for the foreseeable future. Many analysts believe that comparing a company's dividend payments to its free cash flow is a better method for assessing dividend safety. With that in mind, we will now compare General Motors' current dividend payment to its free cash flow. General Motors generated negative $81 million of cash flow from operating activities in the first quarter of fiscal 2019. The company distributed $626 million of common share dividends during the same time period. In other words, cash flow did not cover the company's dividend during the quarter. Looking out over a longer time horizon, our conclusion is the same. General Motors generated $15.3 billion of cash flow from operating activities in fiscal 2018 and spent $25.5 billion on capital expenditures for negative free cash flow of approximately $10.2 billion. The company distributed $2.2 billion of common share dividends during the same time period. General Motors dividends were not covered by cash flow during 2018. Using free cash flow, our conclusion for General Motors dividend is that it is at a severe risk of being cut in the near future if cash flow does not increase. Companies do not cut their dividends in the good times. Instead, dividends are reduced when companies experience financial difficulties. With that in mind, this section will analyze General Motors' current dividend safety in the context of the company's historical recession performance. General Motors performed extraordinarily poorly during the last recession. The company filed for Chapter 11 bankruptcy on June 1, 2009. General Motors re-emerged from bankruptcy restructuring a year and a half later. The company's stock had an initial public offering on November 18, 2010. Because General Motors entered into bankruptcy during the last recession, we have serious concerns about the company's ability to maintain or raise dividends during future economic downturns. The last angle that we will use to assess General Motors' current dividend safety is by looking at the company's current debt level, which is a cause of concern for many investors. More specifically, we will see how much the company's weighted average interest rate would have to increase before its free cash flow would no longer cover its dividend payment. At the end of the first quarter of fiscal 2019, General Motors had $14.5 billion of total debt outstanding. The company generated $181 million in interest expense in the most recent quarter, for a weighted average interest rate of 5%. Normally, we include an interest rate stress test in these analyses that shows how much General Motors' weighted average interest rate would need to increase before its dividend would no longer be covered by free cash flow. Unfortunately, General Motors' dividend is already not covered by free cash flow, so we have excluded the stress test from this video. We reiterate that investors should monitor this trend closely moving forward. Thank you for watching today's video, which performed a deep dive on General Motors' current dividend safety. We invite you to subscribe to this channel and like this video, which will help more people discover Sure Dividend's investor education efforts. If you're interested in learning more about our systematic approach to dividend growth investing, visit our website at www.suredividend.com.